The crypto space rarely sleeps, and every so often a new project bursts onto the scene with momentum that's hard to ignore. Over the past week, one name has been making headlines: Aster DEX and its native token, Aster. Since its launch on September 17, 2025, the token has surged by more than 2,700%, rising from just 8 cents to a peak of $2.42 in less than 7 days. That kind of movement naturally sparks curiosity. What is Aster, and what does its token really bring to the table? Let's answer that. At its core, Aster is a decentralized exchange focused on perpetual futures and spot trading. It launched on the BNB Chain, but is designed to run across multiple blockchains like Ethereum, Arbitrum, and Solana. The platform is backed by YZi Labs and offers some of the most aggressive features in the DeFi space. Trading fees as low as 0.01% for makers, up to 1,001 times leverage in its simple mode, minor extractable value-free trading, and even hidden orders aimed at institutional players. The Aster token is more than just a speculative asset. It serves as the governance and utility token of the exchange, giving holders a 5% discount on trading fees, access to airdrops and rewards, and a voice in the platform's decision-making. Out of a total supply of 8 billion, around 1.65 billion tokens are in circulation, with $1.93 billion locked across chains and more than 1.5 billion concentrated on BNB Chain. Aster has quickly become one of the biggest players in perpetual futures trading. Aster wasn't built overnight. It was formed through the merger of two earlier projects: Astherus, a yield-focused protocol, and APX Finance, a platform already specializing in perpetual futures. Together, they brought experience in yield-bearing assets and high-volume trading, creating a single entity that could scale quickly. The token launch included a massive airdrop of 704 million tokens to early users and a one-to-one swap for APX holders. This reduced circulating supply, creating scarcity right out of the gate and fueling the token's initial price spike. So how did Aster climb nearly 3,000% in a single week? Several factors are at play. First, visibility. Binance's former CEO, Changpeng Zhao, or CZ, posted multiple times about Aster's DEX, highlighting features like hidden orders. While not a formal endorsement, those posts poured gasoline on the hype. Second, performance. Aster DEX is not just competing, it's beating rivals like Hyperliquid. On several days, it ranked first in perpetual futures volume globally, hitting over $25 billion in daily trades. Features like tokenized stock perpetuals, allowing users to trade assets like Apple and Tesla in a decentralized setting, having drawn both retail and institutional users. Third, incentives. Aster's Genesis Stage 2 rewards program has been handing out 4% of the total supply through trading activity, with bonus multipliers for team-based participation. That's a recipe for high engagement. Put together with listings on Binance Futures, MEV-free, and BingX, this gives traders both easy access and deep liquidity, driving demand. Scarcity plays a big role in Aster's rally. With only 20.7% of the supply in circulation, demand has far outpaced availability. Scheduled unlocks will release more tokens in the months ahead, but for now, scarcity and whale activity are pushing prices higher. Reports suggest large investors have been accumulating heavily, with one notable $9 million swap from Hype to Aster causing a major short squeeze. On-chain data confirms surging activity. 330,000 new wallets joined within 24 hours of launch, and daily trading volumes are hitting billions. The platform also uses trading revenue for token buybacks, which could support long-term value. Still, some analysts warn of possible wash trading inflating volume numbers, a risk that traders should keep in mind. The big question is sustainability. Explosive growth is exciting, but it often comes with turbulence. Token unlocks, scheduled from October 17th, could increase selling pressure, and if reports of wash trading gain traction, credibility might take a hit. On the other hand, Aster's roadmap looks ambitious. Genesis Stage 3 will expand rewards to spot trading, while new integrations are expected to deepen liquidity and utility. Features like yield-bearing collateral, tokenized assets, and enhanced privacy tools aim to keep users engaged beyond the initial hype. With annualized fees already pushing $195 million and a rapidly growing base of over 1.2 million wallets, Aster has a strong foundation to build on. The next few months will reveal whether it can convert its current buzz into long-term dominance in the DeFi space.